So now I feel like the critical mass has joined, and we can kind of we've done our enough kind of due politeness, and so we're going to get rolling. So thank you everyone for joining for this Placer AI webinar, the new rules of retail. For a sense of what we're going to be discussing today is we're going to start off with a quick introduction to Placer data for those of you who are new. We are then going to look at kind of the latest data we have and some of the interesting things we've been seeing. And then we'll dive in for the bulk of the webinar into the new rules of retail and some really interesting concepts and changes that are happening. And as always, we will end with a Q&A. If you have a question at any point throughout the webinar, please utilize the Q&A button, and we will try to get to as many as possible, either throughout the kind of the course of the webinar or at the very end. I am thrilled to be joined today by Gabby Yo, Vice President at Fifth Wall. Super thrilled, especially because of the unique perspectives that Gabby brings, both understanding the changing retail environment we operate in, a deep understanding of the retail real estate space, and also a keen look at how these spaces are evolving forward and the innovation changing them. So Gabby, thank you so much for being here today.
Great to be here. Thanks, Ethan.
And again, for that super quick introduction, how do we get the data that you're going to be seeing in the backdrop today? So Placer observes a panel of over 30 million devices throughout the United States. Very critically, this is all anonymized aggregate data. So we are GDPR and CCPA compliant. We then leverage that panel to run AI and machine learning algorithms on top of to make estimations on retail locations across the country. We then present that data in a wealth of different reports within our platform on everything from visit counts, the customer journey, cross-shopping, void analysis, and a whole lot more. Usually those images do pop up. We're having a little bit of a struggle right now. And if anyone is interested and new, please check out placer.ai. We have a free version of our platform. We also have a section called the Square, which houses all of our free tools. So if you're kind of interested in understanding a little bit more about location data, please check out those resources. But into kind of the thing we all came here to discuss, and it's kind of a table setting question. I think one of the things that we always want to start with is just looking at overall, where does retail stand, and what have we learned from the course of the visit trends over the last year? Obviously, it's been incredibly tumultuous, a lot of changes, many of which would have been difficult, if not impossible, to ever really see coming. And Gabby, I just wanted to start with, January specifically was not this kind of glorious start to the year, obviously very related to kind of the rise of Omicron and a whole range of other challenges. Does the start to the year change your perspective on where you felt like retail was trending pre-January?
Yeah, I would say yes and no. I think this slide's actually a great reminder of the importance of having an omnichannel strategy. Are you able to reach your customer both online and offline? Because each of these channels are going to come with both its benefits and challenges, right? So like, if I think about the offline side, certainly you'll be vulnerable to any COVID outbreaks. You're also gonna be vulnerable to bad weather or labor issues, things like that. But it's also where 80% of retail sales are being done today. So in my mind, still a sort of an obvious channel to be in. And then online, I think you're faced with, increased competition because barriers to entry are so low. And then now with iOS changes, it's becoming even more expensive and less effective to acquire customers online. And so while e-commerce is growing as a segment, it represents only 20% of retail sales today. And so I think it's a balancing act between the two, but your best defense in this environment is really having an effective strategy in both channels. And if you were to ask me, how did great omni-channel brands do kind of in the month of January, I would actually guess they probably did pretty well.
It's super interesting and such an important point. It kind of feeds into this next question of what kind of adaptability gives you. And you kind of mentioned that it's not just, obviously COVID's this wonderful example of why, but again, weather, labor issues, any range of challenges can arise that make this multi-channel approach so important. I do think though there are, some really unique elements to this mix of challenges that we've seen and kind of this kind of confluence of so many factors at once, obviously many rooted in each other, but still, I guess, how do you, when you look at retailers and you look at retail performance, how do you contextualize, again, labor shortages, supply chain challenges, inflation, COVID, when attempting to understand specific retailers in the sector overall and how it's moving forward?
Yeah, well, I mean, to start, I think, these labor issues, the supply chain issues, they're going to persist well into 2022, unfortunately. Um, so in my mind, it's, who has the ability to invest in the future? It's prompting, I think, a lot of retailers to start thinking about it. But investing in tech, investing in automation, generally thinking creatively about how to address some of these issues. One interesting kind of side example here I thought was um, Domino's announced that they will start paying customers $3 to pick up their own pizza, given the historic labor shortages they're facing. And so this only tells me that, these issues are very real and they're affecting large and small players alike. Um, but on the flip side, I think it's going to prompt a lot of change, a lot of investment going forward, whether it's robotics, automated checkouts, new formats of stores, new pricing structures, and so on.
That's super fascinating. It does speak to this changing environment, like you said. I think so many of the expectations we had of where acquisition should take place, what's more expensive and what's cheaper, it's all kind of being flipped on its head, and it's forcing brands to need to be much more flexible in terms of how they approach the market. But now we kind of get to the kind of the true kind of main course of today's webinars was what's the new in retail. And we speak about newness a lot. I think very often it's not all that new, but in some cases there are some really exciting kind of trends and changes that are driving a tremendous amount of impact within our space. And I think one of them, and granted, we've been talking about this for a little while, but I think it's only becoming more and more important and more obvious, and we're still probably at the beginning of this wave, is these digitally native brands that are coming offline. And I think, you mentioned one reason in terms of rising acquisition costs, but I wonder, when you look at it more broadly, why is this digitally native kind of wave taking place now?
Yeah. So actually, I think a couple things going on in this chart that I did want to touch on. So one, this is their location kind of in the Miami, or this is their location in the Miami Design District, which itself has seen incredible transformation over the last 5 years or so. So I think for this particular location, Warby did do a great job of site selection here, perhaps through the use of tools like Placer, to pick a great space with great co-tenants and year-over-year foot traffic that's sort of growing. So I think, great site selection will pay dividends for years to come, whether you're a digitally native brand or otherwise. But second, with Warby, when I think of the eyeglass category, something like 8% of eyeglasses are sold online. So when 90% of your business is being done offline, you absolutely want to be opening stores. And retail locations have been a core part of Warby's strategy for some time now. I would expect that to continue to be the case going forward.
Do you think because of that, this is a model that others will attempt to replicate? Obviously, you mentioned they're more offline only, so maybe they're not the ideal example. Do you think, though, that there is stuff to learn from people who, brands who are less kind of dependent on offline, let's say?
Yeah, I think it's prompting a lot of brands to think about it, right? I think with Warby, their offline channel is one of the more profitable channels for them, and particularly as you continue to do this calculation around, is it cheaper to acquire customers online versus offline? Retail starts to look very attractive at current levels.
That's super interesting. One of the things that kind of we talk about quite a bit, whether it's companies like Aspen Dental, Carbon Health, but even Industrious, other brands that are kind of in these non-traditional tenants in many retail environments, we are seeing like this really strong rise of shopping center owners, mall owners, thinking more broadly about what they're trying to fill their mall with and breaking down these traditional expectations of what you would find in a retail space. What is the draw for a shopping center with these types of players and this shift away from maybe the traditional retail focus?
Yeah, well, and it's great to see Carbon Health here. They're actually a portfolio company of ours, and they were part of our broader thesis around the consumerization of healthcare. And I think that actually, I'm happy to touch on that a little bit because I think it'll help answer the question around, what is the draw? But I think, when you think about healthcare 5, 10 years ago, it was not a very consumer oriented category, really low NPS, um, really low customer repeat rates. People are generally like avoiding going to the dentist. No one had a regular primary care physician that they would see. And then typically these doctors were located in medical offices that weren't very easy to get to. Today, you have healthcare concepts that are really acting more like consumer brands. So they're wanting to deliver on customer service. They're wanting to deliver on convenience. They're also wanting to be where the customer is, which means, wanting to be in a shopping center, wanting to be in a great high street retail location. So I think you're starting to see more interest in healthcare players wanting to become retail tenants, um, first off. And then as a shopping center, I think you always want to be thinking about where the innovation is, where the growth is. I think healthcare absolutely checks the boxes there. Um, but landlords should also be thinking about like how to diversify your tenant base. And healthcare is, not only is it designated as an essential business, but it's also probably bringing incremental foot traffic that may not have otherwise gone to the center. So in my view, that's like a real win-win. And you mentioned co-working. I think that's another great example. We invested in a co-working concept called Industrious back in 2018. And historically, the base of their business was built on partnering with office landlords. But collectively, we saw a great applicability and potential on the retail side as well. So we helped facilitate a partnership between Industrious and Macerich, who's the third largest mall operator in the country, also an anchor LP of ours in our retail fund. And together they opened a location in 2018 and have since opened several more. And interestingly, the partnership marked sort of the first time a major mall owner had partnered with a co-working company in kind of a multi-property rollout, which is interesting to see how recent that was. But it's been a great outcome for both of them. And I think another great example of opportunities to diversify tenant mix.
Yeah, it's such a great example. Industrious was one of the ones that always kind of caught our eye as this is genius. How did nobody think of this? When you kind of consider the type of space they're looking for and what they bring, you think about, you talked about this diversity of the optionality it gives to the shopping center. If you have a more diverse mix, to then be able to fill spaces differently and think differently about when your visitors come and what you can do with those spaces, in the sense that, an industrious visitor is not the same thing as someone who's going to the Gap. And so that likelihood that you're bringing in traffic at times that aren't your normal peaks is such a powerful asset. And it's one of the things we really love when we look at these kind of conversations, is that very often they're so complementary and they bring strength in areas that normally that strength didn't exist. For so many of the shopping centers we look at, when you have these different tenant types, again, Carbon Health, Aspen Dental, excellent examples of this as well. It's such an important element of kind of, I think, how things are evolving. But it also, I think the question is, in the long term, does it create new demands? And so, when you're thinking about whether the shopping center needs to attract the right digitally native tenant or health or co-working tenant, do shopping centers need to change the way they kind of approach kind of development and their processes in order to better attract these tenants?
Yeah. And I think actually when you look at this chart, the progression from Q1 to Q4 in and of itself, to me, is a reflection that they are shifting and they are adapting, particularly when you consider there was such a string of retail vacancies in 2020 that have since needed to be backfilled. I think they're just now going to start to see sort of the fruits of their labor come to life a bit. In terms of where to go from here, I think, it's a lot of what we spoke about in the prior slide about thinking about alternative use cases within retail, whether it's healthcare or co-working, but thinking through the benefits of diversifying that tenant base could be really helpful. And then, potentially thinking creatively about lease structures for tenants who you think will be able to attract incremental traffic to the center.
So it's a really good point. I also think it speaks to, you mentioned something really interesting because there is this, we have seen this trend taking place. And, we were speaking with one specific mall owner when we were at ICSC in December, and they were talking about how, yeah, they've been embracing this trend for several years. Macerich is another great example. And you are seeing the benefits of those shifts. And I think we're about to see that second wave where it becomes really more widely adopted, but that makes for a much more interesting experience in these locations depending on the different touch point that's kind of kicking off the initial visit. I think that kind of adaptability, and we talked about this in the beginning, it's just this push towards how, as a shopping center or a retailer or anyone else, you're flexible with what is being given to you and how do you build around it. Such a core component to succeeding in this current environment. I think one of the things, and you talked about this earlier, was kind of omni-channel and how significant that is. Yet, I think one of the challenges has always been omni-channel doesn't mean the same thing for all people. Like, it obviously means very different things depending on what you're operating in. How do you think retailers should go about trying to find the ideal omni-channel mix? And are there any kind of clear rules they should follow?
Yeah, I think finding the right mix is going to be very sector specific. So, we talked a bit about eyewear before with the Warby example, and they only have 8% of sales being done online. So I think it's really assessing within your category what mix of online versus offline sales is happening. And then tactically beyond that, I always think it's helpful to look at more mature peers in your sector, seeing how many stores do they have across the US? Is their footprint growing or shrinking? And that's probably a good starting point in terms of understanding what the market can bear. And then I would say being able to use tools like Placer for site selection to sort of help optimize the portfolio after that, right? But identifying the right site.
It's so interesting you bring that. I mean, obviously, I'm a big fan of Placer. I don't think that requires any like any kind of forewarning statement. But I think one of the really exciting things we've been talking about a lot in the last few months is the measurement of these omni-channel elements. And I do think that, especially with the acquisition costs, and like you mentioned, the shifts in Apple and what it does for kind of targeting users and the like, this ability to better understand the value that your location has and spreading your reach and giving you those eyeballs and those opportunities is going to be so critical. We did a webinar with a health retailer, must be almost a year and a half ago now. And one of the things that was really fascinating was he said how much of their budget they were shifting away from online channels to actually owning locations because they felt like it was almost an ad that could also sell product and kind of provide services and engage with the user. And I think that shift is so massive in terms of what people look to get out of it. And I think it's also where you're going to see the most interesting retail expansions of like, this is, I know it's a sillier example, but it's maybe my favorite is kind of the M&M store, where you think about like, it's not just about selling M&Ms. Obviously, there are better, more efficient channels to get as much as, whether it's pretzel M&Ms for me, I don't know what your favorite is, but there are better ways to procure those M&Ms, but to create that experience, to create that interaction, the hundreds of thousands of people you see cross through those doors, whether it's in Orlando or New York, there's this ongoing value. I think these are the shifts that are so fascinating because they increase that mix of people who can, in theory, fill a space like you were talking about before. I think shopping center owners are going to have more options than ever. It's going to be really interesting to see how do you build those ideal mixes now as things change. I do think that one of the things that when we talk about digitally native brands, the change, we talk about it from the shopping center perspective. We talk about how all these changes are impacting the brands themselves. We less focus on kind of the classic big retailers. And I wonder, from acquisitions to like kind of store in stores, we are seeing major retailers kind of take a big bite out of this digitally native pie, so to speak. How do you see these interactions evolving in between, the Targets and Best Buys of the world and the digitally native brands?
Yeah, to me, big picture, what I think is going on here is, in my mind, major retailers have distribution in spades, right? They have the store infrastructure, they have the foot traffic, and so on. What they don't always have is kind of like the of the minute innovation or merchandise that's going to be compelling to the changing needs of the consumer, which is where I think digital brands come in. So whether it's acquisitions or store in stores or other ways to partner, I think the reality is these partnerships have the potential to be really synergistic. And so I generally believe and can see them continuing going forward.
So, you know, we got it. I got an email in as we're kind of, you know, we were talking about the digitally native brands at the top. And interestingly enough, it touched on this. It's how, I mean, how do you see them expanding out as we go? And I think specifically when this example, you know, what's the opportunity for like testing markets? So everything from like pop-ups, these store in stores feel like a really, you know, I can't stop looking at the Sephora Kohl's partnership as Sephora's most brilliant chess move of like, this is how I can see what suburban retail looks like for me as I try to figure out what my next decade of retail looks like. I feel like these store in store concepts are going to become, you know, much more significant. How do you see that playing out?
Yeah, absolutely. I think with these partnerships, as long as, you know, as long as both sides are getting something out of the partnership, Kohl's and Sephora, it was a great marriage of, you know, Kohl's foot traffic with the Sephora product. But you know, as long as there's sort of a win-win situation happening, I think it's great. And then, you know, I also think if you're unable to find a partnership opportunity, there's always an opportunity to take the offline retail experience into your own hands and build, right? So you don't necessarily have to wait for a partnership with a big retailer to count on that foot traffic. I think offline experiences are available to you in either instance. But certainly, I think when it's synergistic, the partnerships will sort of naturally happen as they have in the past.
Super cool. I'm excited for the breakdowns of the partnerships. Like when they stop working together too, that's going to be really fun.
Oh boy.
Just kidding. Just kidding. We got one question in. It said, traditionally, digitally native brands have utilized smaller format stores as they enter physical retail, but we've seen Wayfair and others start to look at large format locations. How do you see the size of DNB, digitally native brand physical stores evolving in the future?
Yeah, that's a really interesting question. I feel like Wayfair, again, I go back to, I think it depends on the category. So with furniture in particular, absolutely makes sense for it to be in a big box. But then certainly for, you know, smaller players with more of a limited SKU count, I think smaller format makes more sense. So I think part of it is also just the product category that you're playing in.
It's a great point. It's difficult to sell a couch in a really small store. So moving on, I think when we think about, so we look at this angle of like, you know, how do the traditional retailers kind of interact with the kind of these rising digitally native brands? But I think the reverse is also really important and interesting. What do you think the digitally native brands can learn from traditional brick and mortar retail leaders?
Yeah, I mean, I love in this chart that it's you're showing the Allbirds and the Livermore location. It's not the classic New York SFLA playbook that I think a lot of digitally native brands believe they need to execute on. So in my mind, like a great proof point around emerging brands being able to grow offline in a variety of markets, made even more possible through tools like Placer, right, where you can see the data to back that up. So to me, that's the lesson here is as we're able to see with data just the incredible offline potential for brands in a number of markets, not just, you know, the 4 or 5 major ones that you might typically think of for a digital brand.
I so agree with that point. I feel like there's that necessity for that real big brand oriented store in a major city, you know, for again, that brand effect, which is super important, not minimizing it in the slightest, but so much of the opportunity rests in kind of a beat or two away in these kind of, I guess, not major tier cities, but also in these suburban areas for certain types of brands, if it's the right mix that's living there, especially considering the massive changes in migration patterns we've seen. I mean, like Untuckit could do incredibly well in a suburban market. I think that shift is super exciting. All right, so we kind of the last question, then we'll go to kind of more questions from kind of that we've had come in. You know, what do you think is coming next? What are the big tech innovations to look out for within the retail space?
Yeah, I mean, I think this slide is telling me to say micro fulfillment, which I will happily say. And I'm happy to give context here on the slide because I think it's really interesting. But GoPuff, which makes 15 to 20-minute deliveries of groceries and other goods, they acquired Bevmo back in 2020. And with it, they announced that they would leverage Bevmo stores as fulfillment centers and make deliveries that way. So the traffic you're seeing here, it's likely a mix, right, of in-store customers and GoPuff delivery providers. But I think a really great case study around like a store's ability to leverage space for multiple use cases and really maximize the revenue potential of the box. And then to touch a bit more on micro fulfillment in general, I think the reason you'll probably continue to see growth here is that there continues to be demand from customers to get things faster and faster. Maybe blame the Amazon effect, right? But as Amazon and Walmart and everyone continues to deliver on faster shipping speeds, it's prompting the entire ecosystem to follow suit. And micro fulfillment can be a really effective way to do this because these MFCs are now located so much closer to the customer.
I want to get back to that point you made about kind of maximizing the box better, but a question came in that kind of really touches on your last point. So I want to make sure we get to that. So Mark asks, do you think Amazon raising Prime fees is going to benefit digital brands or traditional destination retailers in the suburbs?
Oh, that's interesting. I haven't thought about that just yet. Do you think sorry, what was the question again? So raising the fees, is that going to benefit brands?
Kind of, exactly.
I think, actually, Ethan, what are your?
I was going to say, I feel like there's two components that are important. The answer is in some cases, yes, right? I think some brands will benefit. But also when you think about if Amazon raises prices, everyone's allowed to raise prices. The challenge with Amazon was when it was free or when it was super cheap, it made it like and nobody was able to find that back. I actually think more people are going to dive into delivery services now because the potential to limit the kind of squeeze on margins is going to be removed by Amazon raising costs.
I would actually agree with you. And the raising price there actually reminds me of how they're now also charging more for grocery delivery. Mm-hmm. And that is actually making all of the other grocery players seem more rational in the space. So I think it's actually going to create, I agree with you, competitive pricing or competitive dynamics. Yeah.
I love your micro fulfillment point. It's a space that I have a deep love and passion for. And I think one of the things that always fascinated me is the companies operating it. If you've ever had the privilege of seeing like a pitch deck for a micro fulfillment company, the level of granularity they have to get to on their impact on pricing is so significant because many of the spaces they operate in, the margins are just razor thin, and so they have to figure out how to make that work at scale. So I think any of these increases that remove the burden from retailers is super significant. I wanted to ask you on your idea of the box specifically. One of the concepts we've spoken about a little bit is this idea of the store as a platform. So if you buy into this narrative that discovery is more complex online, so I go into a store to kind of fall in love with a brand, when my online visit is much more purpose-driven, so there's the value to both sides. The concept of the store as a place where, obviously, we think Kohl's has a store-in-store, Target has a store-in-store, but how crazy is it for Warby Parker to sell like visors in their location, whereas no one's going to go to warbyparker.com to look for a visor. If I'm in the store, maybe I buy it. So this concept of like the store is serving this added platform component, but it's more difficult to achieve online. I wonder what your thoughts are on that.
Yeah, I think stores still serve a real purpose in communicating the brand and also creating a really unique experiential part of the brand that can't be expressed online only, right? So I think there's definitely a role to be played there and a lot more interesting things that you can do with a store that you might not necessarily be able to do with your web page.
It's a great point. I think it's like you started off with, it's the balance between them. So how do you use these different channels? How do you incentivize? I mean, one of my favorites, if you look at what Starbucks does and the way they leverage free red cup day is maybe the smartest thing anyone's ever done in at least this time that I've looked. It's this idea that you get a free red cup, but to do so you sign up for their loyalty program, and then they get, yes, so they've given you a cup to get them in a position where you're going to likely spend much more over time, which is absolute genius. And if you already love the brand and the products, it's even better. But I do want to go to this question, and Jerry, the question came in, and I hope I understand it correctly. If I don't, please pop into the Q&A again, and I will reframe it. But with all the changes in retail, what role do traditional financial measures play? Is it even the same financial measures that matter, ROIC, comma, et cetera?
I think, measures like revenue growth, gross margins still absolutely matter. I think in the environment, you're seeing a lot more venture-backed businesses that maybe don't necessarily have to think about profitability just yet, but investors are absolutely looking at four-wall profitability, and they're looking at margins and margin expansion going forward. So I think a lot of these metrics still matter, maybe with earlier stage brands more focused on top line.
I mean, you answered that better than I possibly could have, so wonderful. And now, I mean, a comment came in that I do think kind of is important of kind of, it's interesting when we think about, the question came in basically, why is this Kohl's thing a good idea? But it also touched on something that I thought was really interesting in this idea of like the package drop-offs from Amazon at Kohl's. I think do you see, there's this creativity in saying, how do we get these online offline partnerships? And I mean, in some ways it's like it's omnichannel just between different brands. Do you see that expanding of like kind of the online components and offline components trying to kind of partner and work together better? Do you think this is kind of the beginning of an expanding world of partnerships, or do you look for more brands to maybe own the process entirely themselves?
Yeah, I mean, on the one hand, I understand why they're happening, because I think it's, again, another great way to leverage and utilize what was otherwise maybe just like remnant space or unused space, right?
Mm-hmm.
On the other hand, I think you have to, make sure incentives are aligned. And so I think we haven't seen a lot of partnerships in this way, because I don't know that both sides are getting the clear benefit. With Bevmo and GoPuff, GoPuff acquired Bevmo, and so I think they were very aligned in using stores in a certain way. But I think, as time goes on and these partnerships increase, let's see what's to come. I haven't seen anything beyond kind of, in terms of returns management, haven't seen any partnerships beyond the Kohl's one that is like of note. Yeah.
Yeah, it's a great point. It's one of the ones we looked at a lot, trying to we originally looked at, we're like, oh, we're definitely going to see some shifts in the metrics, and there was literally nothing. Question came in about what we were talking about with the Amazon Prime, and it said, you may be right, but a poll from Civic Science on eMarketer says 30% of Amazon Prime users plan to cancel their membership. This is really important to address. I worked at a company called SimilarWeb prior to Placer, and it's a great example. I'll give you one from Placer too. At the time, it was the Cambridge Analytica scandal, and 25% of British adults said they were strongly considering to completely set on canceling and getting off of Facebook completely. We looked at the data, and the shift we saw in actual Facebook usage or kind of signups, the change was 0% on the trend that had been pre-Cambridge Analytica. So there was no impact. I mean, obviously maybe some, and it's always data and there's things, but not huge. And so I think polling is really important. I'll give you another example. When there was the Home Depot buzz, because one an original founder had kind of declared his support for Donald Trump, we looked at liberal areas, very right-wing areas, and to see if there was some sort of relationship with traffic, because the Trump supporting areas were saying come to Home Depot more than ever, and the ones that were less favorable to the former president were saying don't come at all. And again, no change in traffic. So very often things that catch headlines, or even like our opinions of what we're going to do, kind of conflict directly with what's actually done. And that's why projects like Placer are so amazing. And then, this is an interesting one. So Catherine asked, do you have any examples of interesting ways brands could use their stores to draw shoppers, not including store in store?
Yeah. Any examples that you've seen, Ethan, in your experience to date? I'll also try to think of some.
Pop-ups to me are a deep obsession. I think that is the key. I'll give a we're doing a webinar with Progressive Grocer, and one of the things we're going to talk about is like kind of the food pop-up even within the grocery store. Like those kind of things are such a draw. We're seeing art installations in malls and shopping centers. There are so many creative ways to create buzz and urgency, and I think it's about, are you investing in the communication channels with your customers? And if you're a large chain, obviously that changes slightly, but there are so many ways to kind of create that initial draw. It's just just what, kind of, are you willing to test and try, which I think is super important.
And one other thing I would add to that is thinking about merchandise potentially in a different way in online versus offline channel. So things or experiences that you could only get in store versus what's available online. I'm also seeing, merchandise that you sell directly being different from what you might be selling through channels like Amazon or Walmart. So thinking about merchandise in a unique way as well.
Great point. I'll even tap onto that. One of the, Catherine, one of the most brilliant things we saw during the pandemic, at least for my opinion, is Best Buy at the initial stages of the retail reopening did appointment only shopping. And what they were looking to do was basically, how do we make sure if we can only have 20% of our normal people fill a store, how do we make sure those are high intent visits? And so if I'm willing to set an appointment, tell you what I want to look at, the likelihood that I actually want that product is much more significant. But I think appointment shopping is a missed opportunity in so many spaces. If I'm, Bloomingdale's, and forgive me if Bloomingdale's if you have this, but and it's 2:00 on a Wednesday, I'm offering slots because it's probably the quietest time of my week, and I'm offering slots for personal shopping where I'm going to walk you around the store, show you things, fill out a questionnaire before, tell me what you're looking for. Those ways to make the store experience not just touch and feel better, but focused and fundamentally improved from what you can do online. I think there's endless opportunity. And by the way, that works for a one location mom and pop shop all the way to kind of the largest chains in the country.
Totally agree.
All right. Gabby, I'll give you the ability not to answer this one because this is super speculative, but we got a question. Which retailers do you think will partner next? And I don't really have a good answer. I think the place to look is the people who are doing it well now, because they tend to be pushing you know what? I won't go with them. I think look at Macy's. Macy's to me is a brand that's unbelievably clearly trying to identify their way forward. Not every decision they make works, but they're aggressively testing out new concepts. And so I feel like Macy's, if there was someone I was like, apart from like Kohl's, Target, Walmart, who's going to like kind of push the agenda, they're a company I feel really good about. They have some tricks up their sleeves still.
Yeah, and I would say, I would think about any partners that have, great offline presence, but maybe haven't expanded as much online yet. Even players like Best Buy or Home Depot come to mind. They've done incredibly well during the pandemic, but I wonder if there are even more things they would like to do with particular partners that would help them sort of in their e-commerce growth.
Oh, that's a really good. We're even, we're bearing the lead of the Lowe's, I think it was Petco, the kind of combination. So yeah, I think that's a very good one. I'll stick with my answer so I don't kind of cheat, but I feel like yours is better. And with that, thank you everyone so much for joining us. Gabby, thank you so much for being here. Always really appreciate your insights and ideas. I think they're super forward thinking, and it was really I loved today's conversation. I really enjoyed it and really appreciate you being here. Everyone, thank you so much for joining, and have a wonderful rest of your day. And hopefully we'll see you on the next webinar soon.